Okay, what is going on? We are finally live because every single time I try and set up a stream, it takes me forever. But we finally got it. I am going to be backtesting live in front of everyone today, and we're going to break down the charts, concepts, maybe show you guys some tips and tricks, some insight on what I expect price to do given certain scenarios. And yeah, we'll really just see where it takes us here. Just getting some things set up on my other monitor before we jump in. Let's see. I play some music. I got a headache already, so maybe no music. Okay, cool. So finally on the charts here now. You know what? Maybe I will play some music. Why not? Maybe like some. Gotta make sure it doesn't show or you don't hear it in the stream though. Okay, that's good. Okay, so what I'm gonna do is I have my watch list here of assets I've been watching on currently in current day's time. These are the assets I'm showing up every day and checking briefly in the morning to make sure that, a setup doesn't present itself and that I don't miss the setup. And that's part of trading. Part of trading is creating a watch list that you're going to show up and you're going to check out every asset like so. Just do a quick look to see if anything fully meets your rules and could potentially be traded in that given session. So, what I'm going to do is I'm just going to, for simplicity's sake, I'm just going to choose a random asset on one of my watch lists here. So let's go. My eyes are shut right here. Let's go. What's this? I don't even think I clicked one. Let's try again. Okay, boom. So, Foxa. I have no idea what Foxa is, but I can see the chart right here in front of me. So what I'm going to do is I'm going to replay price. And what I mean by replay price is I'm going to select a period of time that we are actually going to go back to and start the test from there, acting like it's present time, meaning that we're going to trade the data that gets produced as if it's being produced today, right now, because that's the most that's the most efficient way to backtest, right? By replaying old data of a multitude of different assets over and over again. Because if I'm sitting here trying to test data in live time, well, I'm going to only have today's data to test, and I'd have to wait till the next day to test tomorrow's data, the next day to test Wednesday's data. Today's Monday, which is why I said Wednesday. But yeah, so what I like to do is I like to go back a couple years. Let's go like July 2024. And right now, this is where I would be. And on this asset right here, there's certain things I would need to be present to be able to start trading this. The first one being is I want my 2-month time frame to move into accumulation. What I identify as accumulation is a sideways market like this that suddenly breaks out with a series of candles. So what I want to see happen is these candles on the 2-month time frame. I want to see it do exactly what I just said. And as you see here, it actually does that in the next candle printed. So as soon as I see that happen, I'm going to drop down to my weekly time frame and I'm going to note how far we are in this leg. So I would consider this a leg. A leg is a series of structure legs. I'm just referring to it as one leg, because if I go to a higher time frame, that's exactly what it looks like. A single leg on a higher time frame is many legs on a lower time frame. So if I were to label this with my strategy, this would be the first area the weekly broke out into accumulation, meaning it made a big push out of a sideways market, and it created some structure points. So you'll see here we have a higher high right here. We have another higher high right here, be the second higher high. And you'll see I'm actually moving the second higher high here because I only consider a higher high to be made when the lower time frame structure, so you'll see here, have a higher low to a higher high. This is only a higher high here because my daily time frame, you see it fails under the moving averages, showing it reset here. And then it pushes back up. So that's why that's a higher high. And that's why this is a higher high as well. Because you'll see here, price on my daily time frame is now failing the moving averages. So whenever you have a series of structure points like so, the only thing that considers this a structure point or puts in this higher high, that higher high is made because we are considering after that higher high, price failed in these areas here. So you'll see after this higher high here, I'll mark it in black. We then have an area afterwards shown in red. And in that area on a lower time frame, price actually shows that it's failing the moving averages, meaning that this lower time frame structure now put in a lower low, a lower high potentially, and is now going to make that lower low. Delete that. Now, all I'm looking for here is a continuation. So I want a continuation from this higher low to a higher high. Why am I looking for continuations? Well, structure is continuing, right? It's consistently putting in higher price action. So what do I want to expect price is going to do next? Even if it doesn't, well, I want to anticipate higher price action. So I'm going to drop down to my daily time frame here. I need to wait until structure turns bullish again on the daily, because you'll see here structure is bullish. Kind of turns bearish here, but recovers right away, so I wouldn't consider that a bearish turn. But you'll see here, this point is below this previous point that I marked out here, and it's below the moving averages. So I would consider this right here a key point, because not only is that where price failed the moving averages, it's also at a point that is lower than its previous higher low. So that's why this point is so significant here, is because there's two things that are signaling that this daily bullish trend that I just drew out for you guys, like so, has came to an end, and this price now wants to move bearish before its next turn bullish. So before we check that out, I'm just going to check something out on my other monitor here. Honestly, so hard streaming and like doing other things at the same time. Unreal. Okay. So let's wait for this structure to turn bullish because that's the only thing that matters right now. Because on that higher time frame, if I want that higher time frame structure to continue, then I need that lower time frame structure to prove that it wants to be in alignment. Okay, so you'll see here, it actually moves up right away above the moving averages. So important thing to note here. Although price made that low that was lower than the previous higher low, signaling a structure change, and then made this push back up, that potentially is putting in a higher low right here. This is a potential, or sorry, lower high to then continue on this trend to make that lower low now. The fact that this push that created this lower high reclaimed the moving averages, it pushed up above the moving averages, is now potentially going to pause on them. Since the higher time frame is in a bullish structure, I would actually assume that the daily time frame makes this push above the moving averages, not to make a lower high that continues to make that lower low. I would actually anticipate that this is going to be a lower high, potential lower high, to put in a higher low somewhere around here, probably around here, that then goes to make that higher high and structure continues bullish, right? So that's where some people may get wrong. They see that price makes this potentially low that changes structure and they think this is going to happen. But since the overall story on a higher time frame is that we've been making bullish pushes, I would expect, even though this low broke structure here, I would still say that this push above the moving averages is more significant in a way that structure wants to continue bullish rather than continue bearish because this higher time frame. So let's see if that actually plays out. So we have this potential lower high, and we now have a big bullish candle. So a big bullish candle means that a lower time frame structure made a bullish push, because this area here, this area of say 7 1-hour candles on a higher time frame is going to be condensed. So on a daily time frame, it's going to be condensed into one candle, showing a big bullish push, right? Because candles are just going to show us, or sorry, time frames are just going to show us orders. And a higher the time frame, the more condensed the orders are going to be. Rather than if I went into a lower time frame, now I can see more data because I am separating time into a lower ratio, right? So this is where that big push comes from. Okay, it makes a huge push. So you guys see right back to a couple minutes ago, I said that this lower high potentially, instead of going to create a lower low, creating a break of structure here, right? It's more likely that this lower high stops and puts in a higher low right here, higher low, to then create that next higher high, right? Because when we look at the overall story and context of the market, we want to go where the direction is on the highest fractal, because that highest fractal is showing more orders over a longer period of time. And price is going to act like a magnet to what it's been doing on that higher fractal, meaning that it's going to work to continue the higher fractal rather than have the lower time frame act indifferent to it and kind of go on its own accord. So that's why when the structure point broke right here and price made this big push up above the 10 and 20 moving average, that's why I expected it was going to be for continuations of new bullish daily structure after this break rather than bearish structure continuing. So we can now go to the 1 hour time frame. And it's kind of funny because what you see, what I just showed you on the daily with this structure changing bearish and then changing to bullish right away, you'll see the 1 hour time frame actually does the exact same thing, right? So you have bullish pushes, you have a break of structure right here, and then price makes a big push above the moving averages to continue bullish structure rather than continuing this bearish structure, right? Because price wants to go in alignment with what that higher time frame is doing, because we know over a larger period of data that this asset has been in accumulation rather than distribution. And accumulation at its most simplest form just means bullish structure, and distribution at its most simplest form just means bearish structure. So once this bullish structure starts on the hourly, I'm going to get my labels out here. I'll explain the labels another time, but just know the first label is always the sign that this time frame broke into accumulation. So there was some sort of sideways here, and then price made a big move away. And then my next label will go when price makes a pullback, creating that higher high. And we know that higher high is formed because back to the beginning of the stream, if I were to take a box and put it over this area like so, and then go in on a lower time frame, I know that structure on the lower time frame was moving bullish and then changed bearish, which marked this higher high, right? So the 1 hour time frame, what I would expect to happen here is continuations, and that's exactly what I'll play if it comes into fruition. But it absolutely may not happen. And if it doesn't happen, if price does this instead of this, well, my job is easy. If price follows, we'll call this one option B rather than option A. If price does B, then I simply step away from this market because it's not in a condition that would be in alignment with my rules, which means I can't trade it. And if you want to know why I can't trade it, well, if I'm looking to trade a market that's moving bullish, I want to buy it rather than sell it, which if I'm moving or if option B is playing out, price is being sold off rather than bought continuously. So if option B happens, we step away. If option A happens, well, we'll get a chance to enter. So I'm just going to play price here and see what happens, and we'll play it like so. Going to step down to a lower time frame just to get a better view of what structure looks like inside this 1 hour bullish range. So we have this happening right here. I'm going to just take those off the screen for now. So backtrack to about 2 minutes ago. I said that when price comes out of a sideways area like so if I were to mark some sideways price action here just with a line, when price makes a big push out of that, well, that's the potential start of accumulation. So I always label that first sign of accumulation being confirmed with a 1. Now, price out of that accumulation makes that first high. That could be the start of bullish structure on this time frame. Because remember, guys, we had bullish structure, bearish structure that kind of ended up going sideways inside this higher time frame 1 hour range. So what I would want to see happen is, well, if I'm trading bullish, I want to see bullish trend further itself into higher prices. And if for that to happen, price from this area here would need to push up and create that second higher high right here, which could then go on and potentially create a third higher high up here. And somewhere there would be higher lows and the trend would kind of look like this, right? Messy drawing, but you get the point. So I am now on or in a situation where every single time frame I use starting at the weekly is in confirmed accumulation, meaning that every structure on my time frames is bullish. So this is where you move down the fractals. And when you move down the fractals and you confirm your rules are met all the way through, you're going to reach a point where you're sitting at your entry time frame or on your entry time frame, mine being the 10-minute. And the only thing you have left to do, given you get the final confirmation, would be to enter the trade. So to kind of summarize that into simplest terms, if all my rules are met down the order of my time frames, there's really just one last thing I'm looking for in order to enter. So my weekly's bullish, my daily, remember, it fell down below the moving averages, created a break of structure, and then reclaimed the moving averages, which we broke down on why we thought that this area here was going to continue bullish rather than go bearish. So once that played out, we knew that we could drop down to our hourly time frame. And we actually broke down how we saw the exact same scenario happen on the 1 hour time frame, because price is fractal, meaning that the same things happen over and over again, just the way they show up may look a little bit different because price isn't perfect. So once that hourly broke structure here, we then again, we assume that it wasn't for the opportunity to move bearish. It was actually for the opportunity to create a new bullish leg, which came into play. So now we're sitting here inside this 1 hour range where our 10-minute time frame is now showing us that its potential is to create bullish structure further out of this accumulation. So my entry time frame is the 10-minute. So I enter off of this pattern here. So below price action, if you guys want a simple look at my entry model, it, in most simplest terms, looks like this. You have structure moving in one side, on one side, that breaks down, moves sideways. So this area here would be moved sideways. It moves into accumulation, right? That big push up would signal accumulation through that point. And then what I do is I would buy stop the first higher high in the anticipation of that bullish structure. So you'll see here, if I were to put my trade indicator, say right there, how if you look at both of these things here, let me move this to the side. This picture here and this picture here are the exact same thing. And I hope you can see that. So really all there's left to do is see if price action taps me in this trade. And we allow price to either go for a win, continue where I allow my stops to get moved to break even, and then maybe we even take a break even, or price will just hit me out for a loss. So let's just play this and see what happens, because there's even a chance that price doesn't even tap us into the trade. Okay, so you see, instead of tapping us into this trade, price actually just ends up failing down and doing nothing. So this whole trade, we did all of that work. So you guys see how much work went into that. Now it's a little bit longer when I'm explaining it step by step, but you guys can see, considering the amount of time frames we started with, and then jumped down through, confirming over and over again how all that work led to no action. And that's part of trading. Part of trading is waiting and waiting for something to happen that never happens. And then as soon as you think something doesn't happen or is not going to happen, it happens and you miss it. Right? No one knows what setups are going to be the winners or the losers. No one knows when they're going to form. No one even knows if they're going to form. And that's one of the hardest parts about trading, is because you have to pretty much let yourself be okay with the fact you have zero control. And if you look at your own life, you probably want to control everything. In the markets, you have no control, which is why a lot of people have problems. But yeah, this trade here would have been canceled. So all there is left to do is continue on with price. Now, in this 1 hour range here, I probably wouldn't look further, just because price is now super, super choppy, and I would simply just step away. So what I want to happen personally, since, my daily time frame still looks good, the only thing I don't like is my 1 hour time frame. You'll see in this area here, it's super, super choppy. And I know it's super, super choppy because if I grab my pencil tool and I kind of outline the moves, you'll see it makes a big move up, goes down, and then it goes up, down, meaning that lower time frame has some sort of indecision within it. Now, when the market's showing you indecision, if you try to enter in that period of indecision, you have a higher chance of taking a break even or a loss, because if price is moving back and forth like this, there's what's going to appear is, if you're just entering off a simple model like mine, where you have a high like so. Let me draw that a little bit better. If you have a high like so, that was also a really bad drawing, a high like so, and you're just looking to buy stop past this high right here. Well, if price is just doing this over and over again, you're going to have a lot of areas where highs get broken and lows get broken. It's essentially just entering into chop. And that's one of the most dangerous places to enter inside trading. And once you are able to identify chop, it's actually really not that hard to stay out of chop, because for myself, I have a rule where I'll explain to you the rule right here. If I have a range like so, and price puts in that high or low, if price tries to make a run on this high here and ends up failing down like so, and then tries to make another run on this high again, makes a push up again, and then fails again, well, now that's been not one, but two chances to run this high right here. And price has showed me that it's failed to do so, and it would much rather just sit around and chop in this area like so, which means that it's no longer worthy for me to entertain a trade any longer. So that's how I stay out of price action, and it's actually a really easy rule to implement for yourself. If price fails to take a range high in an uptrend or a range low in a downtrend, then you simply just walk away. So that's what happened here. So I'm just going to walk away. You'll see price starts making that push up on the 1 hour, delivering this high, which is okay. I'm still not going to get involved, even if it continues. It's fine. So now we have this right here, a new high on the 1 hour time frame, which is perfect because price has shown that it's now moved out of that area of chop, which we just went over, and is now in a new area, which I would consider almost like a fresh zone. A fresh zone where price has the opportunity to prove itself to us if it wants to continue in the direction that we are hoping it goes in. So this 1 hour high, second high gets put in. And I know that because the 10-hour structure is now moving bearish. It's under the moving averages. It's creating lower lows, lower highs, lower lows, lower highs over and over again. So I want this to start moving sideways above this area here, because if it comes down all the way here, well, now it's kind of re-entering this area that price was chomping in. So if it actually starts moving sideways in an area up here, I would actually consider this more strength than weakness, just because it's no longer in, like I said, that old zone that we wouldn't consider fresh. But I would consider this zone fresh because price has made that big move up and is now sitting at rest in what we could outline as a potential zone of sidewaysness here. So let's just see what price chooses to do. I honestly, like I said, no one knows what it wants to do, but we'll react to whatever it wants to do. And granted it meets our rules, we will take the appropriate actions on what to do next. So let's play price here. And you'll see here, this actually looks really good. So price made a slight move down and then pushed back up right away, not only putting in a bullish structure point, this higher high right here. So let me enable that. The first one is the move into accumulation. The second sign here, labeled 1, is the first structure point. So this looks really good. The 1 hour is now in a story where highs, oh, oops. Highs here, and highs here are continuously being liquidated, hopefully. And that 10-minute time frame actually proves strength by creating this big push up above the moving averages. And when price is above the moving averages, that literally means, so to give it a little bit of context here, my moving averages are the 10 and 20 moving averages. So each represents the average of price over the past X amount of candles, being 10 candles and 20 candles. So when price is above those moving averages, it's literally telling me price is higher than what the average has been over the past 10 or 20 candles, which on this time frame, each candle is represented by 10 minutes. So that's over, if I was to look at my 10 moving averages, my 10 moving average, it would be over 100 minutes. Over the last 100 minutes, price is higher than the average of price over the last 100 minutes. So that's a key sign, right? We can't ignore that. because it's a clue. Now, when the 20 moving average, when price gets above the 20 moving average, that's looking at the past 200 minutes of data. And this chart is telling me that the average of price is higher than the last 200 minutes of data. Right? So that's why moving averages are important if you do decide to use them. You don't have to use them. I would be okay with not using them. But for my trading, it just simplifies it a little bit. It puts in less, guesswork into it. And my eyes can recognize right when I look at a chart if there's momentum in the market just by considering what structure is doing and where the moving averages are placed in structure. When you have structure moving bullish, you'll notice that oftentimes the moving averages, like this area here, are under price action because when price is moving bullish, price is continuously moving higher because there's strength in the market, which means it's going to be above the average of price. So yeah, we can talk about moving averages in maybe another video where I could just kind of go more in depth on them. But if you were to write down one thing, price above moving averages means bearish. Sorry, price above the moving averages means bullish, and price below the moving averages means bearish. It's crazy because once you reach a point in trading, just that phrase, just those last two things I said can take you so far. Like if I just knew that and I paired it up with just simple structure, I would still be profitable. But as a beginner trader, there's so much to learn and there's so many confusing concepts that you're considering all at the same time. The reason why learning anything new is so hard, not even just trading, even though trading is probably one of the harder things you could look at and apply this concept to. But when you're new to anything, you don't know what the important details are. The important details being that if you just got rid of everything else and focused on 2 to 3 things, what are those 2 to 3 things that will take you so far that the other things will just fall into place? Like what are those key components? But back to where we were on the chart. So this made a big push up. Now you guys know how I enter. I look to buy stop that first higher high that gets created on the 10-minute. So this is what my entry would look like if price wants to tap us in. And yeah, at this point, if this was live price right now, I know that even though I just set my entry like so, I could still be waiting 20 to 30 to 40 to 50 minutes just to be entered in this trade. Which, is kind of, it's hard. It's hard to sit there and wait to see if you get tapped into a trade that's going to depict whether you win or lose money. Which is why you really shouldn't care. Because, like I said, you have no control over what this thing wants to do next. And you'll get to a point when you have your own system that regardless of what it does on this individual trade, it won't matter. It won't matter because you would have understood the data you have collected on your own system by this point in time over a larger sample size will lead to profitability if you've put in that work to identify a system or prove a system, prove the expected value of a system is going to bring you in more when you win than you lose over 100 trades. So let's just see if this taps us in and we'll kind of go from there. So again, price fails down. So this entry would be canceled. So that's now twice we've done a boatload of work, a boatload of waiting, and a trade that was potentially about to set up just failed down and didn't even tap us in, which is a good thing because it means you didn't take a loss. Not that taking a loss is a bad thing, But since we have rules, right? Since we have rules, we weren't allowed to even get involved in this trade, which is why our capital stayed safe. Right? That's the importance of rules. Because rules are not only going to allow you to get into trades, they're going to allow you to stay out of trades that never even present themselves. Okay? So, I'm just going to play this a little bit further. See if anything comes into fruition. This is starting to get like a little choppy. I'm really like not liking it that much. Yeah, it honestly just looks ugly. I mean, it's still valid to trade if it does set up, but it is starting to look ugly. Um, yeah, it would have to go right away. For me to trade this, I want to see it go right away. Yeah, and it just fails down. Super ugly market. And it really wasn't just one thing that made this ugly. It was kind of a handful of smaller things. But even this trade, if it did set up, I wasn't even confident in it. And I wasn't confident in it because the 1 hour just didn't look clean anymore, right? The moving averages started to kind of turn sideways. You see how they were moving up, they were turning sideways. The 10-minute had already, missed this setup right here that looked way cleaner, and then kind of came down and really didn't give you a strong push out of this area here. So yeah, there was a couple reasons that, make me happy with not trading in this area. But yeah, all we can do is go to the next setup. Don't have to focus in on what didn't happen too much or why you didn't trade something. It honestly doesn't really matter. So I would expect price to fail here. I would expect price to just chop around here. And if it does do that, great. If it doesn't, then we'll react accordingly. Yeah, so you'll see starts chopping. Super ugly. Like, wow. Like, how are you supposed to trade price action like this? Makes a push up, chop down, chop up, chop down, chop up, chop down, chop up, chop down. Like over and over again. You can't trade that. Much harder. Okay, let's see what this does here. It's now created that bearish structure under the moving averages, right? Because we now know when price is under the moving averages, price is most likely moving bearish on that fractal, right? So this would be the 1 hour time frame. Price is moving bearish. But since it came after a big push, I know that if I move up to a higher fractal like my daily, this is now the second higher high that we can anticipate to be ran on the daily time frame, right? And the weekly hasn't changed. The weekly, we know we're still looking for a delivery further. So let's go back to the 1 hour time frame and see if this thing can turn upwards and maybe break into accumulation. Delete that. Price keeps failing down, keeps chopping around, nothing to do, and then makes a push up right here, which is intriguing. Let's see where we're at on the daily. Yep, so this looks pretty good. If it wants to go and create bullish structure on the hourly, I want it to do it here, because if it fails back down, this would be, or create a daily time frame that's not too clean in my eyes. So this is really the last chance price has to go to deliver this daily structure like so. Before, I just consider the daily as failing, weak, not continuing structure, and I would expect the daily fractal to go into some sort of sideways action. That's what I would expect. Let's go ahead and see what the 1 hour wants to do. This is what my expectation is. This is how I would label it. We get the first break signaling accumulation. And then this would be the first high that we can anticipate getting ran. We do drop down to my 10-minute time frame. We finally get that breakdown on the 10-minute time frame. What I want to see is a break up. And price falls too low. And you'll notice here, instead of catching the moving averages right here, it actually fails through them, showing that price wasn't ready to go and it just wants to continue chopping around. So again, there's nothing to do here. Just got to wait. Okay. And this big push here is new money coming into the market. So this push, right? So let me actually highlight this because this is important. So I'm going to label this push and the push we just looked at, which was down here. If I ask the simple question of which push do you think is stronger, what answer would you give me? A being the first one, or B, the second one? I'm going to take a drink of water and then I'll break down the right answer. Okay, so the right answer is B. And it's actually a couple simple reasons why I say that. The first one, let's just break it down in terms of size of the move, right? So size of the move. You'll see here, just by a visual, you don't even have to measure it or anything, but I'll measure it just so you guys get the, the full 100% certainty what I'm telling you is true. This push, this was the length of this push. Let me put it down here. The prior push I labeled A, is only like 75% the length of push B. So push B moved significantly higher, showing that it was stronger. If price makes a push that we can consider longer, that just means it moved more price. Or we call it points or ticks or cents or dollars. So this covered more price action, which was the first sign it was stronger to me. Now, the second reason. What was its influence on the chart? What did it change? What did it signal? How does it look? Those are all the things I'm considering when I'm looking at these two pushes right here. So when I look at push A, it came after price was falling, kind of moved sideways, and then made a big push above the moving averages that had a chance to pause on the moving averages and continue bullish structure like so. That was valid. That's what we had at that given moment, and that's what we were looking to play. Now we know that once we played price a little bit further, it ended up failing. And then not too long after, push B came into the market, which was significantly bigger, right? Push B came after that same fall in price, that sideways price action, and then boom, push B has entered the market. Now, what's different about push B than push A is not only just the size of the push, but where it was coming out of. So you'll see push A, it's stuck. It's stuck in this box. It's stuck in this area of price that's just been chopping back and forth. Although it looked good, it moved above the averages with a nice impulsive candle. The area it happened in was significantly less favorable because price had already showed us prior it was struggling to move from that area. So therefore, the significance of push A meant a whole lot less to me. It should mean a whole lot less to you once you see a push like push B come into the market. A push like push B breaks past all of this sideways action and does something that push A could not do. And what was that? Well, it entered a new area of price that price was struggling to get to in this area here. And how do we know it was struggling to get there? Because at all these points, price decided to sell off every time it tried to make a run and confirm accumulation. Accumulation meaning this, a break past all this sideways price action. So when we consider the size and the influence of push B, that's how we can, I guess, signal to ourselves when we're looking at technical analysis and parts of the chart that are more significant than others, is what does it actually look like? What does it signal? And what does it mean? This signaled accumulation. It means that it actually jumped to a higher area of price that it couldn't get to, which is why I find it more attractive. Okay. So we'll leave that there. That was really good. A really good breakdown for anyone looking to just identify what ranges are better to play and which hold more weight. And if you actually structure your trading and the time frames you use around clear ranges that aren't in sideways price action like so, well, you'll make big strides in your trading. Okay, so we got the accumulation break out of this area here. And then we are now maybe getting the first high that can be ran. Now, I wouldn't call it a high yet because price technically hasn't fell into bearish price action on the lower time frame to signal that higher high on the higher time frame. So I wouldn't do it just yet, but let me play another candle. There you go. Exactly what I just wanted to happen happened. So we'll label that now as the first high to be ran. And we're going to hope that price starts moving sideways and then makes a big push like so. And if I identify that push with a rectangle, the same reasons why that push is strong on the 10-minute time frame is the same reason why this push was strong on the 1-hour time frame. Rules are fractal. I will say it over and over again. Price says the same thing fractally, but the way it appears is different because price is random, price is sporadic, price is literally resembling human emotions, and human emotions are sporadic. So that's why things look different on the chart, but it all means the same thing. So we get that big push up. What I'm hoping for here, let me label this as the first push out of that accumulation. I'm hoping a high gets formed here, like so. Ooh. So I'm going to see. So technically, my buy stop would be placed right here. but I'm going to see if this enters me in before I go any further, because I have a specific rule that I actually don't like. This is one of the rules that I need to change in my system, because I'm at a level now where I can identify if this pause, and what I mean pause, I just mean, price made a push and then kind of halted itself like so. If that lower time frame inside this area here created bearish price action, to mark this as the first high to be ran. A little bit confusing, but let's just see if this taps me in. Okay, so this is a trade, but it isn't a trade that I could get into, unfortunately, because it literally doesn't meet like my very last rule. And I want to change this rule at some point, but I'm not going to now, because it actually rarely, does me wrong, you could say. But I think that if I were to change it, it would actually allow me to get into more trades like this. So I have a 3 candlestick rule on my entry time frame. So before I can enter a trade, I want to see 3 candles. I want to see a candle that makes a high. So we identify as a high as a candle with 2 lower points on each side of it. So one on this side, lower high. When we just look at the candle has a lower high on the left side, and there's a lower high on the right side. So in a bullish entry, that's what I want to see. So we get that. So the first candle of my 3 candlestick setup is met. That's perfect. But then my next candle, my second candle, I want to see a low get taken, meaning that after the high gets put in, I want to see a candle, whether it's a wick or a body, it doesn't matter. I need to see something take a low. Something. And that helps me. Why the rule is a thing in my trading or in my system is because I know when a candlestick low is broken on a lower time frame, that's structure breaking, which puts in this higher high on my entry time frame, seen right here. So I know that if a candlestick low gets broken, then I know this is playing out. Like I said, it's a little bit more confusing, especially if, you don't know how I trade. And that's fine. I don't want to go too deep into that because you honestly don't need to know it right now. You may not need to even know it ever, because there's a million ways to trade. And just because you watch me do something doesn't mean there's not something that works better for you, that'll make you more profits. And yeah. So yeah, let's just see if this trade wins. So it kind of plays around after entry. Hasn't taken you out yet if you were in this trade. Let's just see what it does. Let's just play it faster. Okay. Oh my goodness. Wow. Wow. You can't make this up. This is literally what trading is. We had just played, let me see. We had just played about a month of data. Yeah. Wait. Yeah, about a month of data. We had, prior to this setup, we had 2 possible entries that didn't tap us in. So we missed those, which was great because we don't want to be entered into trades that don't meet our rules. But this one, the third setup that happens, where pretty much everything is met. Like if I were to go down my system, the 20 to 30 rules that govern my system, like 99.9% of them are met right here on this trade. And due to that last rule I just explained to you guys, that 3 candlestick setup I used, I couldn't enter this trade. But if you look at this trade, after it gets entered, it actually almost takes you out for a loss, which is crazy. Like these are the times when you're live trading, when price is down here, literally a couple cents away from giving you a loss. It just turns around and goes back to a winning trade. Those are the ones that, are a little bit harder to sit through. But price, after it kind of plays around your entry, it just starts taking off. And, those are the trades those are the trades that not necessarily you want to be in, but those are the trades that, you know, will tap you in every now and then and give you the possibility of a break even, win, or loss. Now, you guys will actually see here after I played price a little bit further. See, this trade actually ends up being a break even, which is great. You get a break even on this trade. You don't win, but you don't lose. And then, yeah, we're pretty much going to go on to the next trade here. I don't want to break this one down because I wasn't even a part of it. So there's no reason to really go over my management rules and whatnot in this. But yeah, we'll just continue playing as so. Let me just take this off for a second. Okay. So I'm going to take that off because this wouldn't have been a trade. Delete that, delete that. Okay. So I'm just pausing myself for a second because I'm really looking at how price developed inside this 1 hour range just for my own studying. Typically, it was a bigger range here, which is fine. It's not too big. Sometimes you see these bigger ranges play out. But I'm just thinking right here, if I'm being completely honest with you guys, the reason I'm kind of slowing down now is because I believe I would have taken a trade right here that also would have been a break even in the price action that um, slightly followed the previous trade we didn't enter. So I think my entry, once price makes this push and then fails like so, once price comes back up here, I believe I am buy stopping that entry right there. And this is important. What I'm doing right now is important because I'm being honest with myself, right? There's literally no reason for me to document this trade or even tell you about this trade, but it's a break even. It wouldn't matter if it was a loss or a win because I think, or I know, which is why I am sharing this, I would have taken this trade if it was live. And so this is a trade I must document for my own testing and decide, you know, in a given scenario where the 1 hour time frame, my second lowest time frame looks like this, am I okay with taking trades like this? It meets my rules. I would have taken this live. I'm telling you, I would have taken this live because the possibility for this trade could have been really good actually based off how this chart looks, but it just ended up playing around, kind of chopping around and led to a break even trade. So I'm going to put a 0 on this trade, meaning that I didn't win nothing, but I didn't lose nothing. So it kind of sucks I didn't like break that down in live time as we were playing price. I kind of saw it after the fact just because I was looking how that previous trade kind of played out for us. But yeah, that's a trade that would have been taken and would have been broke even. A break even trade is a great trade. Break evens protect your capital. If it wasn't going to be a break even, it would have been a loss, right? Break evens allow our accounts to sit at a level to allow compounding to happen at a higher dollar amount, right? Because now the next trade I take, I'm still trading it at the same dollar value of my account that it would have been prior to this trade. Maybe we can talk about in a different video on why break evens are so important. But yeah, okay. So that happened. We'll document that trade later in the backtesting sheet. We see that the 1 hour time frame makes this push right here. Did the 10-minute time frame structure break? Yes, it did. And then it pushes back up over the moving averages. So what we would expect to happen, let me see here. I need to go back into my case studies and look at setups like this that create a high, but the price action, we can call it the intermediary price action inside, kind of takes a longer time to validate. If I'm being honest, I slowed down on the back testing. So some of the intricacies of my system, I kind of forget on how I would play certain scenarios, which is why I'm starting to back test more now. That's one of my goals, but also document it so people can learn, or I can learn from my own system along the way. But the thing with back testing, sometimes you just gotta slow down and figure out how you would have played this. I know I did typically walk away from setups that would play around for too long inside. Like if I wasn't getting put into the trade within like the next like 10 candles or so, I really didn't like it. But like, I see nothing wrong with thinking this would play out because I know trades like this can deliver. Just in the front of my mind, I can't imagine seeing a lot of trades deliver like this, even though I know they will. Because whatever you think about the market and what can happen, it will happen if you look for it. Whatever you look for in the market, you'll see, which is another mental struggle for everyone, every trader, right? Um, let's continue. So, 1 hour time frame breaks below this point here, meaning that structure has changed on the 1 hour time frame, meaning that meaning that the daily now has put in a new structure point right here, which I can label with a 3, because this would have been the second one, right? That would have been the second one. And what I want to see is the same thing we wanted to see previously, sideways action, hopefully confirmed accumulation through that point here. And price just ends up failing down again. Okay. Creates an accumulation through here. So we'll label that as a 1. Label this as a 1. Go down to my 10-minute. Super choppy. Like right away. Look at this. Wow. Hold on. Yeah, so this is like the ugliest thing you could look at. If ever you're on your entry time frame and it looks like this, just close the chart. This is asking for loss after loss after loss. How do you enter into this? There's no possible way. Well, there is a possible way, but it's not an ideal way and not an efficient way to trade these areas and come out profitable. Because no matter where you enter, price is just entering you in and taking you out. Look how wicky this is, right? Like, what's the point? And you can actually see that wickiness on the 1 hour time frame. Look, it's trading on back and forth of the moving averages. It's just up and down, up and down, up and down. Super ugly. It'd even be considered dangerous as well if you're not careful. So what I want to see now is I would just want to see price make a big move away from this area. Ideally, even since price is so ugly, I'm okay with the daily just failing here and, moving bearish for a second and creating something later in these areas here. Because that's super ugly. Okay. And price does exactly that and makes a big push out from that area. Let me see. I'm just going to put the third. Actually, no. Price makes a big push out on the daily. That makes a big push down after gapping all the way up. So when price gapped all the way up, it immediately came down. So this is just bad price action. What I'm gonna do, because I don't even want to waste anyone's time, I'm just gonna play the chart until this becomes more clean and actually would be worth trading. Because there's no way I'm trading this live. Okay, like you have this now. The average is caught up on the daily. You have that move out of accumulation. The 1 hour time frame. The 1 hour time frame. Let me see if it's created. This is a pause, but it's not clear. So I'm not going to label that the first high to be ran. If it forms up here, I'll label it up here. Okay. So you get a drastic 1 hour candle like that. Comes down. Maybe if price settles here in that area, then I can look to trade it. Okay. Okay. This is about to be an entry by the looks of it. The only thing that's throwing me off is this big push right here. Super ugly. Given this move, I mean, yeah, I'm gonna trade this. Looks good. If it's a loss, I'll take the loss. Because given the look and where it meets on my rules, I'll accept the loss if it gives me one. But yeah, let's see. So enters me in, comes back down, and then moves back away. So I'm actually break even on this trade, which is great. Risk is off the table. Let's hope that price can continue to structure upwards, because if it does, it may lead to a winning trade. And wow, see that? You can't even make that up. Oh my goodness. Like, you guys are seeing it right in front of you. Price takes me out at break even. And then in the next 10, 20, 30, 40, 5 candles, goes 7x what I was risking. Meaning that this trade would have been a big winner, right? But it took me out at break even before it decided to run. What I noticed with a lot of my trades is that price will tap me in somewhere near in the afternoon, and then it'll like kind of maybe move away from the entry and then kind of hover around it. And then based off market open the next day, it'll either gap up into profits and I'll get a winning trade shortly after, or it'll just take me out in like right at market open. So this is a tough one because this is a trade that was very close to winning, but ended up hitting me at break even. And that's fine because, like I said, I didn't lose any money. My risk was off the table. And eventually, those moves are going to keep you in and you're going to win. So let's keep playing price out. So we missed that trade, or we didn't miss it, but it was break even. So far, out of probably playing a month and a half of data, we've taken 2 trades. They were both break even. And we had 2 other trades that we thought were potentially going to tap us in that never tapped us in. So we've lost no money. I hope to either in this backtesting stream lose money or win money. Obviously, it's play money, it's demo money because the market's not even open. I'm not live trading this. I think we've all understood that. But I'm playing it out like I would be live trading it, right? So you'll see here this big 1 hour candle fails under the moving averages and takes away a swing low right here, meaning that price on the 1 hour time frame is probably going to move bearish. So let's just have that play out in front of us. You see it right here. Daily time frame is putting in this higher high here. Perfect. Let's see if the 1 hour can break up again, because it's moving great. The chart is actually moving great. You'll notice it was about 15 minutes ago we were talking about how price was choppy. We can't trade this. What the hell is this? If we trade this, we're going to take losses. And then we allowed ourselves to take a step back and let price, not that it had to, but we allowed price to become cleanly again, which then gave us an opportunity to continue looking later on, right? Now, keep in mind, if this was actually live trading, you don't have to wait for a market ever to do what you want it to do if it's currently not. You could just change to the next asset, right? There's 1,000 assets in front of you. You could just easily delete it off your watch list and go to a new one. So we have the 1 hour broke into accumulation. So we're going to label that with a 1. Notice how I'm just doing the same thing over and over again. Isn't it crazy? It's also very boring. But if you can do the same thing over and over again, it'll pay off in trading. Not right away, but so what I want to see now is the 10-minute breakdown. If it hasn't already, it hasn't, so I'll get rid of that. Because once it does, that'll confirm, breaks down, that'll confirm that the higher high is put in on the 1 hour. And we want this higher high to be ran like so. So let's see. Chops around, really nothing, very choppy, falls down a lot. This is probably no good. Yeah. So you'll see the 1 hour fails the moving averages. So it's moved past this higher low here and made that move under the moving averages. So it's currently bearish. And I'm not moving bearish or looking bearish because you'll see here the daily time frame is still in a bullish trend. And the higher I guess you could say, control the lowers. So the lower time frames create the higher time frames, or they work to make the higher time frames, and the higher time frames have higher influence on what the lower time frame wants to do. So let's see if this 1 hour time frame can break back up, which it does right here. Perfect. Do that. First break out of the accumulation, like so. Let's see if the 10-minute failed yet. It didn't, so we'll delete this as the higher high isn't put in yet. Okay, 10-minute starts to fail. We can put that back because I now know the 1 hour higher high is in place. And then let's see if the 10-minute can set up. It's a big setup. It's a big, yeah. I wouldn't take this. If this delivered, so this is one of my rules. If the stop loss on my 10-minute entry is too big, like this would be too big. Like this would have to go very high to deliver for me, which it could, but it's not my style of trade. So I would delete this and I'd wait for something better. Like that. Okay. Give me a second here. Okay. So we now have that second higher high formed on the 1 hour time frame, pausing on the moving averages, right? So it's pausing on the average of price. And this is important. I haven't talked about this yet, but when price in structure is pausing on the moving average, it's essentially what it's doing. It's pausing on the average of price that prior buyers have got involved at. So this area is important because it's telling me if the average of price is going to hold, then buyers have to step in right here in this moment right now. And if they do, well, the trend has a chance of continuing. So we actually have a setup forming right here. So my entry would be right here. And we are going to allow this thing to enter us in. And yeah, we'll let the probabilities fall whatever way they want to. Let's see. So we get entered and we get taken out. It's a loss. So this trade is a loss. -1. There's really nothing else to do besides forget about it and move on. So we are now 3 trades in, 2 break evens, and 1 loss. So by now you're probably like, oh, what the heck? Like, how have you not taken a win yet? You've taken 3 trades and you have yet to win. Yet I've just sat on, a video over an hour. Like, what the hell? So you don't get to pick when your winning trades come. But when they do, oftentimes they make up for all the losers and they make it up quick. So to put in perspective before it even comes into play here, because in this stream, I don't even know if I will get a winning trade, right? I imagine I'm probably going to stay here for another 30 minutes and whether we get another trade or not, we may not see a winning trade. But if I were to get a winning trade, well, when I get a winning trade, I win 5x what I was risking. So if we play a scenario where I've taken 4 trades, I lost 1, I broke even on 2, and then the 4th one I won 5. Okay. So when we calculate expected value, you have to take the percentage of the amount of times you win and multiply it by how much you win and subtract it by the percentage of whatever time you lose and how much you lose. And if that number is positive, then you're a profitable trader. And if you were to just boil it down to one equation, however much you win, how often you win, subtracting how much you lose, how often you lose. So these last 4 trades, well, if my next trade is a winner, we're just assuming that it may not be. My next 3 trades could be losers. But if this was the outcome of my random probability of how the random probabilities drop in my trading session today, the answer would be, am I profitable? And the answer would be yes. Because, well, 5, how much I won, minus 1, the break evens cancel out, those aren't wins or loses, would be 4. So if I'm risking 1%, I just gained 4%. Now, 4%, this is just, this is kind of like a little account breakdown talk for you guys here. 4% is going to be different person to person. 4% to you might only be $40, right? Or let's make the numbers more simple. Say you're trading $10. 4% to you, I don't even know, that's 0.04, right? 4 cents, I think that would be. My math is maybe cooked. Maybe cooked. But it's all relative to your account size, right? Someone trading with $1,000 who makes 4% is making a whole lot less than someone with an $100,000 account who makes 4%. But they both put in the same amount of work. They did the same amount of actions. One person is just being rewarded more heavily because their money has compounded more, or they had more money to start with, or whatever factors come into play, right? But yeah, I'm gonna stop rambling, and I'm going to just go to the next trade because my throat's getting dry. Okay, so this trade was a loss. Leave it on there. I'll document it later, and then we can just continue further. Price breaks down, and now price is pretty choppy in this area here. So I would simply just look away. Now, what I want to backtrack to is, you guys will remember my rule for considering choppiness is when I have a range. I already broke this down, but I'm going to do it again just in case you forgot. If I have a range and price fails to deliver that range not once, not twice, it comes down again a third time, well then I would simply lock off this whole area. I don't want to trade it. Ugly. Price isn't moving from it. So what do we have here? We have, I wish I could, can I delete these labels? Not delete them, but maybe just hide them for now. Cool. Price made that first push, failed. Second push, failed. Now it's done. I'm not looking at this until price shows me that it wants to enter a new area above all this price action. Simple. So let's wait for that. Still just playing around, like literally not doing anything. And then boom, we get that right there. Let me look how that looks on the daily. Oh, it's still pretty ugly. Yeah, I mean, not the cleanest. Not gonna lie. Just because, like, there's so much price action in this area. Now, granted, price did make that big push out. Normally, what I would do is I would try and play this. If I'm being completely transparent, so I would mark it as we've marked it every other time. First sign being, sign of accumulation. Second, second sign here, second one would be the first high that's potentially going to get ran. You'll see the high is valid because the lower time frame broke down within, marking this as the higher high. Now we're going to wait for that hopeful higher low that gets put in, maybe somewhere in this area here. Okay. Okay. Price fails. Nothing to do yet. Nothing to do. Choppy. Choppy. This is this is valid, a valid trade, but it's choppy. Like, it's not the cleanest, if I'm being honest. It does meet my rules. But it's not the cleanest. I'm going to look how the 1 hour looks here. I mean, 1 hour doesn't look. You know what? The area. It's just the area. Like, the setup is fine, but the area is. You got to listen to yourself and what you think and how it makes you feel sometimes. Because if something feels off, you're probably not confident. And you're probably not confident for a very good reason. And whether you want to admit the reason to yourself or not, there's something present that's throwing you off and is making you second guess. There shouldn't be any second guessing. If something meets my rules and everything's met A to Z, the only thing left to do is enter. Well, you'll notice how on this trade, and I'm analyzing myself right now, I'm thinking a little bit more. I'm analyzing a little bit more. I'm asking myself what if questions a little bit more. And it's because of the area I'm trading in. So what I'm going to do is I'm going to skip this trade, which could be, a winning trade, a losing trade, break-even trade. Doesn't matter. I'm going to skip it. Because by looking at this trade, there's probably 2 to 3 things I don't like. And I'm going to list them off to you right now. Starting with the daily time frame, we're in a lot of chop, which is probably better seen on the 1 hour time frame. We'll see a lot of chop. Price pushes, fails, pushes, fails, pushes, fails, pushes, fails. The second thing I don't like is that this range is kind of loose. Like, it's not a tight range. I like my ranges to look a little bit more tight, a little bit more smaller inside this area here, which is turning me off from this setup. And then the third thing I don't like is that inside that range, the 10-minute time frame, it's not the best push out of the accumulation, and it is kind of choppy as well. So I'm going to skip this trade. What I will say here is that it's much easier to skip a trade in backtesting than live trading. And the reason for that is because in live trading, you actually have to experience the time spent analyzing, meaning that you had just spent X amount of days, X amount of weeks sitting on your hands and your feet waiting for a setup. And then this setup presents itself and it doesn't look A+. You can't enter it, but it doesn't look the greatest. And you have to make the conscious decision to skip this setup live, right? When you know there's an opportunity to make money, the rules are met, but something's missing. Well, that's when you start to separate yourself in the trading sphere from someone who is more so amateur to someone who's starting to think like a professional, right? Because this is your money. This is your money you're using. Trading, we can consider it a business. It's your money working for you to hopefully produce you more money. and you want to use your money in the best way possible. So by entering setups that don't look the greatest, well, are you using your money in the best way possible? The biggest thing you can take from the past 2 minutes of me talking is that you need to have the ability to say no when everything almost looks like a yes. And you want to tempt fate with, you could call it the carrot dangling in front of your eyes to see if this trade is going to play out in your favor or not, right? It's all about self control. This whole thing is about self control. So back to the trade. Let's see how this plays out. I'm going to skip it. Maybe it wins. Let's see. So the trade was still valid. I would have just moved my stop loss here. And it enters you in. And funny enough, it actually enters you in and starts taking off like in a very clean way. Let's see. Let's play a couple more candles. Okay. So it just ends up being a break-even trade. It moves away, hits you out at break-even, kind of comes down a little bit more, and then completely takes off, right? It actually takes off in a way that would have been a winning trade if it didn't hit you out at break-even. Or if it didn't come down and take you out for a loss after it would have hit you out at break-even, right? So a little bit of, choppy price action, part of the game. We would have had avoided that given that we made the decision to sit out, right? So a new range gets made on the 1 hour. Not yet. Once our 10-minute fails, I'll leave that sign up there for now. Let's see if the 10-minute time frame fails. Boom, boom. It starts failing right there. Moving a little bit faster now. And then we have... Oh, wait. No, that's good. We have a new setup that presents itself right here that we can take. So let me just, we're on our 10-minute time frame. This would be the first accumulation break. And then this is the first high. Like I said, we know I buy stop the first high. So we would potentially have a trade again right here. So you notice this trade is actually coming a little bit, shortly after the previous trade, right? Like I said, sometimes you're going to wait, months, weeks, days between trades. Other times trades are just going to set up right after one another, right? That's why you always have to be present. If you're not present, you're going to miss trades. And that's actually one of the hardest parts once you're profitable is to, show up every single day. So yeah, let's see if this trade taps us in and let's see if it would be a winner. So it taps us in. We're in this trade. And we're break even now. You see prices taken off. So I haven't explained this yet. I'm going to explain it now. I've explained it in the past, but I break even when my trade runs 1-to-1, meaning that however much I'm risking, when my trade runs 1-to-1 my risk, that's when I break even. So for this trade specifically, I risked 20 cents per share. So once this gets into 20 cents profit, I just break even. Simple. So stop loss would be break even. This is a risk-free trade. Now, just so you guys know, I manage a little bit unique compared to a lot of traders. I haven't really seen a trader. This is actually funny because I have never seen a trader manage like I manage. I've seen people take partials or fixed TPs. I'm a little bit more different. So once my break evens hit, I do this. When my trade runs 1-to-4 RR, so I have 1-to-4 marked right there. I actually move my stop loss from break even to 2 RR. So I do that. So my stop loss, once price hits up here, I kind of want to, I don't want to ruin the trade, but I want to see if price actually hits there so I can do it simultaneously. But let's do it. Let's do it without showing price. When price gets to this line, 1 to 4, my stop loss will be moved right here. Okay. So I will say stop loss here when price is 4RR. Okay. Now, so when price hits 4RR, I'll have you know that I take a full profit at 5RR or a partial, or I close, sorry, it's not a partial. I close my full position at 2RR. So a little bit confusing. If I were to summarize it, I've already said it before on my channel, but when price hits 4RR, I'm pretty much trapping it in a way that guarantees me a win. And I do plan on changing my management strategy into something that actually allows me to extract more money out of the market. But pretty much when price hits 4RR, it's done. It's either going to come back down, hit me for 2RR, or it's going to take me out for my full profit at 5RR. And when price hits me at 5RR, those are the big gains that get made on my account, where the 2RR wins, if price does happen to come back, are like those small wins that keep me in the game, that even allow me to, you know, get a little bit here and there on my account. Okay. So let's just see what price does. We're at break even on this trade. No idea what's going to happen, but let's see. Hopefully it does what we want it to do so I can show you my management in full effect. And that's unfortunate because it ran 1 to 3.3 our risk. So it didn't hit our 1 to 4. It just comes back down for our break even. And that's fine. So now, did I write it somewhere? That's fine. So now we've taken 3 break evens and 1 loss. Like I said, we are not, the random probability of a win, loss, or break even is not in our control. The same way this is 3 break evens and 1 loss in this session right here, it could be 3 losses and 1 break even. It could be 3 wins and 1 break even. It could be 3 wins and 1 loss, right? It's random. And then you'll see here, price kind of dumps a lot actually from where we previously entered. Price made that move up and then actually just starts dumping a lot. And it actually looks like it breaks this structure point here on the 1 hour time frame and is most likely going to be starting short-term bearish price action. We will allow that to play out. And what we want to see here is we want to see a push like so. And if we get it, we'll get involved, or try to get involved, I should say. Let's see. Still need that push out like that. Perfect. That's good. We have accumulation right here. Label that with a 1. We have the first high as well. Perfect. We know that's a high on the 1 hour because the 10-minute pushed bullish and then started breaking down bearish under the moving averages. Let's see if this 10-minute time frame can start turning up. Nope. Fails down. And there's nothing to do on the 1 hour time frame again. So let's wait, see if it can re-break back up. Okay. Breaks up. Still looks good on the daily time frame. So we have a new accumulation on the 1 hour. Excuse me. 1 hour high gets put in here if the 10-minute breaks down, which yeah, I would consider this. It's a little bit subjective. It's not really subjective because it's my own rule, but when price is kind of moving sideways long enough on sideways moving averages, even though if it's not a clear break, I would consider it a pause or a reset in structure. So that's how I'm going to play it because that's how I would normally play it, and I'm not going to change anything. So that's how we'll treat it. And then we have price gaps up. Creates a 10-minute accumulation through this point with a high right here that can be ran. Our buy stop would be around here. Now the stop loss is big, so I don't like this. Let me see here. Pretty much buy stop like the whole candle. It's not bad. Like it's a little big. I mean, I would enter this trade. I would enter this trade. So fuck it. I'm just gonna enter the trade. Let's see what happens. Okay, let's see if that's 1-to-1 yet. Okay, so ran 1-to-1. So this is a break even. Great. Let's see once again if this is going to hit us out at break even, or sorry, I shouldn't write break even on that yet, or if it's going to run to 4RR, which will guarantee us a win, either 5RR or 2RR, or if it goes the full 5RR, we get a big win. All right, let's see. Most trades will come back and hit you out for a break even or a loss. I haven't said that yet, or maybe I have. Like most trades, do operate that way. I only have, based off like 1,000 tests, over 1,000 tests, multitude of thousands. My win rate is like low 20%. My break even and my loss rate typically are like 35, 40% a piece kind of thing. So yeah, good to know. And yeah, this is a break even. Break even trade. Mark it as so. Move on. So we're now 5 break evens and 1 loss. So I'm going to flip the switch here and kind of go a little bit deeper into that, because at this point in the video, we've taken 5 trades, right? Now we haven't won anything, which is fine. But it's also important to note that we only lost once, which would essentially be, 1R, then R being the amount you're risking. So I risk 0.5%. So let's just say I lost 0.5%. If I risked my money up 5 times and the worst thing that happened is I lost 0.5%, I need you guys to recognize how good that is, right? It's actually amazing when you consider that within those 5 trades, it allowed for the opportunity for 1 win to be present, 2 wins to be present. Shoot, maybe you go on a good run and 3 out of the 5 trades are winners, right? When you look at the data over a long enough period of time, after some of those wins start setting or coming in, over 30, 40, 50 trades, then that one trade you lost, that 0.5% I lost in a span of 5 trades, or say I lost 2% in the span of 10 trades, it doesn't matter. It's so small. And I think you need to start looking at the fact that, when you have rules that create a system and they allow you to enter into the market or not enter into the market at certain times. And when you do get, permitted to enter 5 times, the worst case scenario is you lost, 0.5%. So, like, let's just do the math here. Let's bring up a calculator. Let's just assume like $100,000 account, because that's like, I don't know, everyone kind of creates that as a base in trading. $100,000 funded account, whatever it is, blah blah blah. So half of 1% is $500 on a $100,000 account. You can lose $500. If you want to trade, then I know you want to make way more than $500. So you shouldn't be scared of losing a smaller amount than what you one day want to make, right? 0.5% in the grand scheme of things is very low, no matter your account size. No matter your account size. It doesn't matter if I do $100 account size. What's 0.5%? Oh my God, it's 50 cents. Can't make that up. 0.5% of $100 is 50 cents. Now, do you know how hard it is to lose 100% of your account value when you're risking so minimal like this? Right? You literally would have to lose 200 trades in a row to lose 100% of your account value. 200 trades in a row. That's not considering the fact that you're going to take wins here and there. That's not considering the fact that, in my case, 30 to 35% of my trades are going to be break even, right? That's why risk management is so important. The losses don't matter. They just allow you to open the door for wins. So if you can start forming a good relationship with losses, well, your trading will probably change. And if you start, collecting data governed by rules, which create your system, and you see that data play out for a long enough time, way longer than 5 trades, way longer than 20 trades, way longer than 200 trades, then you're going to be able to see an equity curve. And I'll actually pull one up for you guys right here. If I can pull one up real quick. I'll click anyone. I have a lot, but let's see if I can just find a quick one here. That one's not large enough for my liking. See this one. This one's not bad. Sure, I'll show this one. This one has a good amount of data points. So when you start allowing yourself to collect data and go through losses, you'll notice that the losses don't matter, because all they are is small little downlines on a much bigger scale. They're little blips. But yeah, just recognize the fact that I put my capital in the market 5 times and I only lost once, but opened myself up to win 5 times. And when you have a risk management system where you know that the winners are going to make up for those small amount of losers and your break evens are going to keep you in the game, well, you'll start to see the power of creating a system rather than coming into the market in an inconsistent way. But yeah, my brain is fried, so I'm gonna end. But yeah, I think this video was super super valuable. Um, I think there's a lot of takeaways. And if I were watching this in like 10 years, I think there's like 3 or 4 things you could take away from this that could actually seriously help your trading. So yeah, peace.